Hi, this is Mohan Kumar from Brainy Balls. I have been recently posting videos about a Nifty options buying intraday strategy, which I call it as Triple Threat Intraday Strategy. So this video is to show the Nifty chart, how we could deploy this particular strategy onto the Nifty chart, and look for signals to get into long or short positions on intraday basis. So let's quickly get into the chart. Here we go. So I use the trading view charting platform. So you're looking at a two view chart. So on the left, I have the Nifty spot chart, and on the right, I have the Nifty futures chart. So this strategy can be used to to trade in both Nifty futures and options as well. Okay. So the reason why I call it as triple threat is like everything is in terms of three. So I use a 3 minute time frame, like you'd see. These two charts are set to be on a 3 minute time frame. So this is a chart for April 10th, 2023, right? And I use three charts to take trades. Now these chart number one is Nifty spot, chart number two is Nifty futures, and the third chart is the Nifty options chart, right? And this video focuses on how the strategy is deployed and how, with the help of the technical aspects, we are going to see clear signals to take up trades, right? So I'm not going to use the Nifty options chart in this video, but just remember that we use three charts to trade in Nifty options, right? Okay, great. So before I move on to the next point, which is about bringing the indicators. So the TradingView platform is best suited if you want to write custom indicators. So that's one of the reasons why I prefer TradingView, because I could actually write my own indicators. So this strategy is based on three indicators, right? That's why it's called triple threat. And these three indicators are not out of the box, means like they're not available in TradingView directly for you to use them. So I have actually built these indicators to work on Nifty, exclusively for Nifty, on a 3 minute time frame. All right. So these three indicators which I'm going to bring on cannot be used on other scripts, cannot be used on other time frames either. Right. So it's purely meant to be used on the Nifty charts. So I'm going to bring on the three indicators. I've already overlaid the indicators onto both of these charts. As you can see, they are hidden. So I'm going to bring them one by one. So the first indicator is the price levels. So again, I use three different price levels. So this indicator has three elements. The first element are the price levels, right? The second element are the moving averages, and the third element is the volume candle, right? You could see some colors. The candles are colored, right? So volume candles. So like I said, anything that we discuss will be in forms of three, and even if you drill down to the next level, they again will be in forms of three. So this price level indicator talks about three elements, right? Volume candle, moving averages, and the key locations or levels, right? And when you look at the key locations and levels, again, I have three different types of levels. One is the daily pivot, right? I use a central pivot range, and I have the resistance and support levels, the daily pivot levels, right? And the second location is the previous day range, which is the previous day high, the previous day low, and the previous day close, that are marked in white lines, and the dotted line is the previous day close. And the third location, it is they are nothing but they are dynamic, of course, and I bring it from the past, based on the price action. They are called the resistance support zones. So I only bring those if it matters to the current day trading. So you don't see any, because there aren't any resistance or support zones from the past which matters to April 10th trading session. Okay, so these are three major key locations. And when it comes to moving averages, you see three moving averages. Again, they're all specifically set up to work on a 3 minute time frame. So you cannot change the time frame, and if you do, these moving averages will not work the way it is supposed to. Okay, so you have three moving averages, so it's called moving average band. And of course the volume candle, it colors the candle based on the volume, right? If the volume is higher, it colors to white. If it is significantly higher, it colors to orange, as you can see. All right, that's on the downside. If it is higher on the upside, it's going to be in green. If it is significantly higher, it's going to be it's going to be the blue. All right, as you can see here. So that's on the price level indicator. The second indicator is the market participant. I'm just going to bring it on. As you could see, these dots, again, there are three colors, and there is another fourth color as well, which is the purple. So three colors are white, blue, and green, and the fourth color is a purple one. So the participants, they play a major role because it's the participants, which confirms whether there's going to be some action seen in the market. Okay, since we're going to trade in Nifty options, momentum is the key, and momentum comes in when there are more participants. So hence, there should be a way to understand or to see clearly where the participants are, right? So that's why, again, this indicator is exclusively built for Nifty, and it's based on various parameters, and it throws colors based on various elements which are being used to build this particular participant indicator. The third indicator used is the trend meter, so which I'm going to bring it on, right? So trend meter, it talks about whether the trend is strong, the trend is weak, whether there is a conflict with the price, okay, and if the trend has bottomed out, if the and is bound to reverse on the upside, or if the trend has peaked out and it is bound to reverse to the downside. So the trend meter gives signals about the trend itself, right? And if you see, these three indicators are not the same on both of these charts. This chart has three indicators which have their own settings, and again, the same indicators in this particular chart have their own settings. Hence, they are not the same. They are named differently, and they are bound to work differently as well. Okay, but the underlying concept is all the same, which we just discussed. Okay, now let's quickly get into the details as to how these three indicators work in conjunction, and it will actually give signals for us to take trades. So, the three important rules as per the strategy is the triple threat strategy is based on these three indicators. We generate three conditions for us to get into trades. The first is the price should be at a key location, right? The location as defined by the price levels. And the second is when a certain location the price is at, there should be market participants, for us to understand how the momentum is going to be, right? And third, the trend has to highlight or indicate that no, the trend is going to reverse, the trend is going to continue, right? Or if there is going to be a breakout. So these three indicators give us the signals based on which we get into long or short positions. So for the first 30 to 45 minutes, we observe the market. So we do not enter into trades up until 9:45. It's only post 9:45 we take trades. So as we look at the price action for the first 45 minutes, the price is sort of consolidating. It doesn't give us a clear signal as to whether it is going to go up or not. But post 9:45, you could see the price retraces back to the EMA lines, and the EMAs are raising EMA lines, which means, and if you look at the trend is almost no bottoming out, right? And if you look at the trend, it's almost bottoming out, and the price is at a key location, which is the moving average, and the price also has come back to the 10 o'clock low range, right? So this is a very important level. Look at the price action, look at the candle patterns, and look for the market participants. As you can see, there is a green dot which confirms that there are some participants entering the market. And as since the price is between the moving averages, it's still not clear as to whether the moving average will hold the price or if the price is going to go lower, right? And also the price is right above a very critical level, which is the central pivot range. So all this is a clear indication. Raising EMAs, price above the central pivot range on both the charts, and there are some participants coming in. And as you can see, there is a pin bar, a major candle pattern, right? And there is a participant as well, which is confirming the price is going to go higher. And the trend also is indicating that it's moving higher. So this is where we get into the long position. Our first position is going to be this, right? So I'm going to mark, and we are going to write the trend. And as you could see, this particular level, which is supposedly the previous day high, has been compromised because the price has already moved up and down and there wasn't significant participation. You don't see any dots around this level, right? Because this is no more considered as a major level, and hence the price is bound to go beyond this. This is how you read the price action with the help of the trend meter, with the help of the participant, and locations. You get the signals, and then you decide whether the price is going to go higher or lower, and how the momentum is going to be. And as suggested by the indicators, the price moved higher, and as you can see, when the price goes to the red lines on both the charts, which indicates that the price has peaked out, it is time for you to book profits. So you trail your stop losses. So I use the green moving average line to trail my stop losses, and I exit out of the trade when I see some participants entering the market. So whenever there are participants entering, when the trend is at its peak, which means that they are actually squaring off the positions, right? So that's the cue I get, and I also square off my long position right here. Now look at the trend meter. The trend meter is already indicating a slide in the trend, right? On both the charts, there is a slide in the trend, correct? There's a slide in the trend, but look at the price. The price clearly indicates that it's moving higher, right? So this is called the price trend conflict. And now these are all the strategies that we discuss in the webinar, right? But yeah, this is the price trend conflict. The price moves higher, the trend meter indicates that no, the trend is weakening, and you could see a lot of participants. Relatively there are more participants. You could see different colors: green, white, and blue, and you could see there is a volume candle as well. So this clearly indicates that the price is going to drop. And as suggested by the indicators, we take a short position right below when the price moves below this green candle, and we ride along the trend. And as you can see, the trend meter, when it goes down to the green, it has bottomed out and the trend is bound to reverse, and that's exactly what happened. So we took the trade here, right here, and we exited the trade right at this place. So that's exactly how we trade, based on the signals that it generated, right? And these are all the trades that we have taken. So we got good two trades, one long and another one short, you know, and on intraday basis we made some good profits. So we discuss a lot more in the webinar, right? What we just saw is a brief overview about how the strategy worked on this particular day. There are a lot of setups, there are a lot of actually price action patterns and candle patterns which works in conjunction with these three indicators that we have used, and that's going to give us clear indication as to which direction the price is bound to move. And we take our trades based on the signal that these indicators generate. If you really like the content, if you find this particular video interesting, please do like the video and subscribe to my channel to get timely updates on videos like these. I'm planning to update a daily video. So I'm starting from April 10th, 2023 chart. So I'm going to be uploading videos for the entire week, because the strategy will give us signals to take two or three trades on an average every single day, right? So I'm going to post videos on a daily basis. Worst case, I will try my best to at least have 3 to 4 videos in a week uploaded, with the price action patterns and the signals based on which we have taken trades. So thank you so much for your time, and you take care of you and your loved ones. See you in another video. Thank you. Bye bye.